Forex Whale Education Channel.
Hello traders, ladies and gentlemen, boys and girls. Okay, in this video we're going to talk about engulfing. Okay, the topic for today is engulfing. So engulfing is a very famous technique or candlestick formation that is used by many traders out there because it is very simple to use and it's also very reliable. That's important. So let's take a first look at how or what an engulfing is. Okay, so engulfing. Okay, so an engulfing is actually a candlestick reversal candlestick. Okay, so once you see the formation of an engulfing candlestick, know that there is a chance for a reversal. Okay, so bear in mind that it is a reversal candlestick. Okay, so engulfing alone is not enough. That is why we have introduced to you a few other topics that you can use as added confluences. For example, we have SNR, we have market structure, and we also have trend line. Okay, TL is trend line as added confluences. Okay, it just works very simple. I will show you how to use this technique and how do you place your trades, the SOP, the stop loss and take profit level. Okay, so first of all, I would like to show you the formation of a engulfing. Alright, so an engulfing would look something like this. Give me some time to draw this candlestick first. Okay, so first of all, you'll see this. And then you will see another candlestick. Okay, so this will be in green. Alright, so now, as you can see, that the red candlestick or this bearish candlestick is bigger in its body size in comparison to the candlestick before it, this one. Okay, so this candlestick is formed first and then comes this candlestick that has a bigger body size that engulfs the previous candlestick. Okay, so that is why it is called an engulfing candlestick. Okay, so most likely you'll be seeing this candlestick at any time frame, it doesn't matter. You will see this formation at all time frame, but please just focus on H4 or daily or H1 at least when you are in search for this bearish engulfing or engulfing candlestick. Right, so the best candlestick or the best engulfing candlestick is when not only the body size is bigger than the previous candle, but also the shadow. Okay, this one. Wait. Okay, I'll show you. Okay, not just the body size is bigger than the previous candlestick, but also the shadow is also bigger than the previous one, or it is longer, or it engulfs the previous shadow as well. Look, this shadow is longer than this one, and this one is of course longer than this one. Okay, so that is the characteristics of a engulfing. So this would be I'll draw another one. Okay, same thing, same concept. Okay, so this is a bullish engulfing. This is a bullish engulfing. Normally you would see this candlestick formation at the very peak and at the very bottom at the chart. So when you look at the chart and you see that it is at the very bottom of the chart, it is at the very peak of the chart, usually there will be this formation. And also when looking for major SNR, you will also see the formation of this candlestick. It's very common. I'll show you later when we go through a few currency pairs to identify and to locate and do our back test to see how strong and how powerful this engulfing is. Okay, so on your left, which is this one, is your bearish engulfing, and here on your right is your bullish engulfing. So a bearish engulfing is when we look for the buy. Bearish engulfing is when we look for a sell, while the bullish engulfing is when we look for a buy opportunity. Okay, sometimes you can see this formation. It will look something like this, and also it will be an SNR2. Okay, so if you've already understood SNR, you could probably just look for SNR first, major SNR, like for this one. Okay, so A is your resistance, V is your support. Okay, it will look something like this. Right, so once you have located your SNR, you have already found your SNR. Look at the formation of the candlestick. Sometimes it will form this bullish or bearish engulfing. Okay, very simple. I hope you guys understand this basic first. Okay, so since it is a reversal candlestick, it is very normal for us to see that this kind of situation. I'll show you a situation first. Okay. I will just show you a situation that price would normally do. Okay, sometimes price would just do this. Okay, you see that there is all this bullish candlestick formation until at one point this bearish engulfing is formed. Okay, so usually what will happen is, okay, stay focused guys. Okay, we're gonna start the complicated process already. So you can see that usually price would do things like this, right? You see, excuse the drawing. Okay, and then we do one more here. Okay, and then change it to green, and then have also the shadow. Okay, so since it is called a reversal candlestick, look, this is usually what happens in the chart. Okay, price creates all this bullish candlestick, this green candlestick. So you see that, okay, price is going up, right? And then it create a new candlestick also going up, and then this third candlestick is also a bullish candlestick. Okay, and then because the characteristic of engulfing is a reversal, so you see that when the next or the fourth candle form engulfs the previous candlestick. Okay, so it goes with a form like this, right? So in the line chart, it will look something like this. In the line chart. In the line chart, it will look something like this. Okay, price goes up, and then suddenly there is the formation of this bearish engulfing. All right, so what is the possibility? The possibility is that when price has already created the bearish engulfing, the next candlestick would most probably be also bearish candlestick. Okay, it will also be a bearish candlestick. Then price will continue that move to the downside after the formation of that bearish engulfing. Very simple, guys. Okay, so this is theoretically speaking. Same thing goes with the buy. Okay, the buy will be bearish candlestick formation, maybe 3 to 4 bearish candlestick, and then comes in the bigger candlestick formation, which is a bullish engulfing that engulfs the previous bullish candlestick. That is for bullish engulfing. Look, sometimes, okay, there are situations where the price engulfs both candlestick both previous candlestick. For example, I'll give you an example. Okay, look closely. Okay, sorry guys, I'm just trying to get this thing removed, but it's actually quite annoying. Okay, so as you can see, the body, the formation of this engulfing, this bearish candlestick engulfs not just one candlestick that is formed during the previous one, but it also engulfs the second one here. Look, this body is definitely bigger than the previous candlestick, not just one but two. Okay, so this is a sign that the engulfing is a very strong engulfing candlestick. Very simple. Okay, so you can draw this on your notes, and you can look at it over and over again. Okay, and then now is our job to locate this kind of formation. Okay, so there are a few ways for you to trade this bearish engulfing. Okay, we'll go with bearish engulfing first before we go with bullish engulfing. Okay, so bearish engulfing, there's one of few ways to trade bearish engulfing. And the first one, listen, once price has already created this candlestick, okay, this candlestick formation, once price has already created this bearish engulfing, what you can do is wait. Okay, once it completed this move or this formation, what you can do is just put instant order. Okay, just immediately place your trades after this engulfing is formed, and then your stop loss would be somewhere around here. Okay, so the whole entire engulfing candlestick, this one, could be your sell. Or this is when you place your instant order. Once price has already formed this candlestick, once price has already formed this bearish engulfing, what you can do is just place instant trade, or you can just wait till price retest or retrace a little bit somewhere around this area, and then place your trades, instant trade. So your stop loss is still above here. Okay, it's still above here, and your take profit can be maybe 2 to 3 times more than your stop loss. For example, if your stop loss is 20 pips, then your take profit could probably be around 40 pips, 50 or 60 pips. Okay, very simple. If you don't understand, you can just rewatch this video slowly and then try to understand. Okay, the first style to trade bearish engulfing is, of course, once price has already formed the shape of an engulfing, just instant, or you can just wait for price to retrace a little bit somewhere around this candlestick that has been engulfed, somewhere around this area. Your stop loss will still be above this bearish candlestick. Okay, very simple, very simple. So now, since we have already identified the shape of an engulfing, okay, it doesn't really have to be like this, okay, because in theory everything looks nice, everything looks very neat, everything looks complete. But if you can find an engulfing that looks like this, then know that that is a jackpot. Okay, so I'll have all these drawings removed, and now it's our turn to look at the real-time chart and see this bearish engulfing. So there's one example here. Okay, there is one example here. So as you can see, this body, this bearish candlestick body, is bigger than the 2 previous candlestick before it. Okay, so right, so now you can see, okay, the candlestick is obviously bigger than the previous candlestick. Not just one candlestick, but 2 candlestick. Okay, so this is the candlestick, right? And look, the body has already engulfed not just 1 but 2. Okay, look at the shadow, look at the shadow here. Okay, look at the shadow, look at the body size. Okay, so this is your first confirmation. Okay, like I said, you need some added confluences. So your added confluences could be, okay, so this is your support level, right? But that price has already created a new support. Okay, price has already broken through these two support level. Price created this one, and also price created this one. So know that this is your added confluences. I've already mentioned in the first place that an engulfing alone is not enough. It has to have at least one or two confluences. So in this case, the confluence is that the previous support has been broken and that there is the formation of a bearish engulfing. So what can you do here is, once price has already formed, okay, price has already broken this previous support, 1, 2, 3, and then price created this bearish engulfing, right? As I mentioned, once price has already closed as this formation, price form this, you can just place your instant sell, right? Place your instant sell there. So you can instant somewhere around here. Okay, wait. Okay, I'll just draw it so that it looks easy. So this is a break of structure. This is your previous support, and then this is your new support. Okay, and then there is this. This would be your stop loss, and then you would entry somewhere around here. And then if price floats a little bit, you could probably entry a few more here. Okay, why? Because I said, once the price has already formed this bearish engulfing, you can just place instant order, or the price might retrace a little bit to the upside, and then you can place your second entry. Okay, this would be your second entry. Stop loss will still be maintained somewhere around here. Okay, remember, engulfing formation alone is not enough. You need added confluences. So in this case, SNR, and also there is trend line. Okay, there is also a trend line. So the highest point here, and price still haven't managed to break through this two-touch trend line. So you have two added confluences for this particular engulfing sell. Very easy. Okay, very easy. So now look, price went all the way down. Price went all the way down. Okay, this is beautiful. This is beautiful. Okay, so let's look for another bearish engulfing. Okay, so the second way to trade bearish engulfing will be shown, demonstrated later. So here's another example. Okay, as I've mentioned also, that usually this bearish engulfing or bullish engulfing will be at the very peak or at the very bottom. So as you can see here, look, okay, as you can see here, this is a formation of a bearish engulfing. Okay, this is a bearish engulfing. So look, once price has already closed this and formed this engulfing, it is also not just any engulfing, it is a very strong engulf, because it engulfs not just one candlestick but two candlesticks, two previous candlesticks. The body size is definitely bigger, and then you can see that the shadow ends here, whilst the previous candlestick, the shadow ended here. Okay, so as I've mentioned, once price has already formed that, you can place your entry. Okay, just take a screenshot. Okay, so this is the bearish engulfing that you have identified. Okay, so your stop loss would be somewhere around here, and then maybe your entry point is right after. So your entry point would be here. Okay, and then you have your second entry somewhere around that candlestick area. Okay, so your stop loss still maintains. So what is the confluence for this one? There is actually another trend line that you can locate from here to here. So let's just say if I draw it like this, okay, there is the two-touch trend line as well. So that is your confluence. Okay, that is your confluence. Look, the price before it is also is on a sideways, right? So, and then comes the seller. because they have already decided that, okay, let's push the price downwards a little bit more, okay, after this very tiring sideways. Okay, and then you can see that, okay, now sellers are interested, they came in, they created that bearish engulfing, and then our job as retail traders is just to place our trades based on that candlestick. So SL is still here. Take profit is usually 2 to 3 times more than your stop loss size, and then your entry point is either immediately after the candlestick is formed, or at least wait for it to retest a little bit. Okay, so this is the second example for a bearish engulfing. So I hope it is very easy to understand. Okay, just like this one, just like this one. This is at the very peak. Okay, it is at the very top. So your entry point would be somewhere around here. Okay, your entry would be here. E stands for entry, okay guys? And then you have your stop loss here. Okay, so if price do come up a little bit to this candlestick that has been engulfed, you can place your second entry. So your take profit is always 2 to 3 times more than your stop loss. Okay, 2 to 3 times more than your stop loss. So this is usually what happens. Sometimes you don't want to wait for the breakout, pullback, retest. So this is the best way for you if you like to have the quickest way to place your trades. Okay, some people can wait. Okay, a bearish engulfing has already been formed, and I want to wait for price to come retest that zone. Okay, as for my style, once the price has already formed a bearish candlestick, I'll just place my trades. As simple as that. We'll look around for another example. Okay, here you have another example. It is at the very peak. Okay, it is at the very peak. Entry just immediately after that. Your stop loss is here. Okay, and then your take profit is 2 to 3 times more than your stop loss point. Okay, but is there any added confluences here? No. So can we trade this? Yes, we can, but please make sure that you don't forget your stop loss and that you already know that this is a high risk setup. If there is no added confluences, that to me is immediately a high risk setup. Okay, that's immediately a high risk setup. But if you want to place your trades, go ahead, it's your choice. Okay, so let's look at the 4-hour time frame on gold. So usually gold would always do this bearish engulfing. That is at least from my observation, price would always normally do that. So I think there is another example of a way for you to trade bearish engulfing. So let's take a look at the currency pair. Okay, some people, okay, look, here is an example of a bearish engulfing. Okay, this is an example of a bearish engulfing over here. If you zoom in, you can see that, okay, price has already broken this support level. Okay, so that's your confluence number 1. This is your support level. Okay, and then price breaks out. This is also an engulfing. Okay, this is also an engulfing. Right, so you can also label that as your zone. Okay, it did not just break one candlestick, but it breaks 2 candlesticks. Okay, so the whole entire engulfing candlestick, or that bearish engulfing, or that bearish candlestick, is your zone. Okay, this is what I meant when people, okay, first you have your added confluence. Your added confluence is that price has already broken this support level, and then when it broke that structure, this support level, it created this bearish engulfing. Okay, once it created that bearish engulfing, our style would be, okay, once it forms, we will just place our trades here. So our entry point will be somewhere around here, but our stop loss will still maintain somewhere around here. But some people, okay, this is the second way to trade. Some people will just wait. Okay, once price has formed this bearish engulfing, I'll wait for price to retest. And maybe that retest created a resistance level like this one. And then once that is done, I'll place my entry. Okay, some people will just wait for the breakout, pullback, entry. Breakout, pullback, entry. As for myself, once the price is formed and engulfing, I'll just place my trades. Because eventually, okay, if we were to wait, look, if we were to place our trades here, we will get more pips. But if we were to wait for this breakout pullback, yes, we get a good setup as well. It's sharp entry, but we won't be getting as much as the first entry. So this is your first entry. Okay, and then you have your second entry. Okay, so if you want fast action, then you can just place your trades immediately after a bearish engulfing is formed. But remember to have at least a few confluences. 1 is okay, 2 is best, 3rd is perfect. Okay, but if there is no confluences at all, know that it is high risk. Very easy. Okay, very simple, very easy. So now that we have already gone through two styles of trading, bearish engulfing, let's look at the bullish engulfing. It's actually the same principle as well. Okay, look here. What happens is that price was on a downtrend. Okay, so price was on a downtrend. Okay, look at the 3 candlestick before it. Price was on a downtrend. Okay, when price was on a downtrend, price created this bullish engulfing. Okay, isn't this a bullish engulfing? It is a bullish engulfing. Why? Because look at this body. This body is bigger than the previous candlestick. Okay, so once price has already formed this this bullish engulfing, what you can do is you can place your first entry there. Okay, this is your first entry, and then if price retrace a little bit somewhere around this candlestick that has been engulfed, you can place your second entry. Maybe this would be your first entry and this would be your second entry. So where is your stop loss? Your stop loss is below the candlestick that has been engulfed. Very simple. So here's your stop loss. Okay, so here's your entry. E is for entry. Okay, along the zone, in the zone, you can place your entry. Okay, just calculate your risk and you'll be fine. Okay, so what is the added confluence for this? What is the added confluence for this? You see that it is on a major support. So this is your major resistance, major support. Okay, so remember, a resistance that is at its peak and it's sharp and created big movement is a valid SNR. So this support level is a valid SNR because it's sharp, the peak of it is sharp, and it also created a strong move, and that this move actually broke through this resistance. So this is a valid support. So this is your confluence. So what else is your confluence? Okay, you have one confluence and then you have two confluence. The third confluence is the second confluence is actually chart pattern, which we are not going to talk about yet because that will be in a separate video. So as you can see, here is a formation of a head and shoulders. Okay, so not only you have major support level, the engulfing was formed at the major support level, but it is also formed just right after the head and shoulder formation is created. Okay, so this is first example. Look, price went all the way up. So your take profit is always 2 to 3 times, or better yet, 4 to 5 times more than your stop loss. So price continued that move all the way to the upside. Okay, so this is first example without waiting for a pullback. Some would wait for the pullback, but as for myself, I don't really wait for the pullback. I love to get in and out as fast as I could. Okay, so to see how flexible this is, we're gonna look at the other time frame. Okay, so again, you can see the formation of an engulfing buy. Okay, so what is the confluence? The confluence here is a divergence confluence. Okay, something that will be taught to you later on. Okay, so this is a divergence. Okay, and then right after the divergence, price has already created a bullish engulfing. So focus on this bullish engulfing, and you can see that the body is definitely bigger. Okay, for the confluence here is SNR and also divergence pattern. Don't worry, this will be taught later. Just to demonstrate to you that we do not just simply buy after the engulfing formation is formed. We must at least have one or two confluences before we take the trade. So as you can see, after that divergence, what did price do? Price created a bullish engulfing. Look at the body. The main part is, of course, the body must be bigger than the previous engulf. The body must be bigger than the previous candlestick. That is the most important. These shadows are just noises, but like I said, a perfect bullish or bearish engulfing is when not only the body is bigger than the previous candlestick, its shadow is also longer than the previous one. But this one is still fine because we have one confluences here, which is a very strong confluence because divergence is also a very strong confluence. And then you also have at least the body is bigger than the previous candlestick, which is very important, guys. So once price is already formed that, you can just immediately place your entry here. You can immediately place your, you can place your entry here or here or here. Okay, and then where's your stop loss? Your stop loss is below the engulfed candlestick, somewhere around here. You can put your stop loss here. Okay, so here would be your stop loss. All right, so look, it went all the way up 2 to 3 times more than your stop loss. That's fine. That's a good risk to reward ratio. Okay, so let's look for another example, maybe on GBP AUD. As you can see, GBP AUD is still going downwards, but that's not our focus for today. Our focus is to identify bullish engulfing. So here's another one, right? So here's another one, but this one is high risk. Okay, this one is high risk. Why? Because there is no confluences, but as you can see, the body of the engulf is bigger than the previous two candlesticks. So you can just place your entries here and then your stop loss here. Price did went up, but this is a high risk setup. Okay, you can also wait. Okay, once you see like there's this formation of a bullish candlestick, what you can do is just wait for the retest around that zone. Some people will just do this. Okay, I'll show you again. Some people will just, okay, I'll draw a zone for this bullish engulfing. Right, so once price has already created this bullish engulfing, I'll just wait for price to stop in the zone. So here's my stop loss. For price to create maybe a double bottom, or for price to create a support level in here, and then wait for the next retest, and then they will place their entry there. So price will go all the way up. Okay, so you can also draw this, or you can try this, locate this thing yourself. Find an engulfing and see this example. Bullish candlestick is formed, and then you wait for the retest in that candlestick. Okay, the whole bullish engulfing zone candlestick, the body is your zone. Wait for price to come retest, create a support in that zone, and then once this, for the second or the third time when price comes back into the zone, you can just place your entry. Okay, but usually I'll just place my entry once I see that, and especially after a confluences is done. Once I identified my confluences, then I don't need to wait for the retest. Okay, that's my style. This one is also another one. Look, another good example. Okay, this one is a very strong engulfing, bullish engulfing. Why? Look, it not engulf just one, but 1, 2, 3 candlesticks. So here's your entry. Here's your stop loss. 2 to 3 times more than your stop loss. So maybe this is just 2 times. Boom. Okay. And then it went up. So your job now is to identify a bullish engulfing that has a retest. I've shown you the instant one, the most likable one. But if you are going to do a back test, look for this kind of candlestick formation. Follow the SOP, very simple. Just wait for the price to form the engulfing candle, and then just place your trades, but making sure that there are at least 1 or 2 confluences. Or you can just wait. You identify, okay, there is this bullish engulfing here, and the whole body is your zone, and then just wait for price to retest, create a support or resistance in that zone, and then place your trades once the price come to retest that new resistance or support. I hope I'm not going too fast, but again, as usual, if I'm going too fast, you can just rewind this video and watch it over and over again. I'm actually trying to find an example where price created that bullish engulfing and then we wait for the confirmation, but I just don't seem to find it any of it yet. So okay, here's an example. Okay, it doesn't have to be just this is also a bullish engulfing. Okay, this is also a bullish engulfing. You know why? Okay, it doesn't have to be that the candle that engulfs it must be a bullish candlestick, but the one it engulfs doesn't have to be just a bearish candlestick. So this is one example, right? So a bullish candlestick engulfs the 3 previous. I think the whole entire bearish candlestick here is being engulfed by this body alone. Okay, so it doesn't have to be green and then the previous one must be red. Nah, just for as long as the body is bigger and it engulfs the previous candlesticks, then you can still place your trade. It's the same thing. Okay, so some people would do this, right? Some people would do this. Look, this is the bullish engulfing, right? Finally found an example. So here's your bullish candlestick, right? So you wait for price to retest. So switching to the line chart, you can see that price created this like a HNS, or it created a support level. So once price has already created that support level in this engulfing zone, okay, let's switch back to the candlestick and then wait for price to retest, and then we can place our trades. Your stop loss would be somewhere around here. Okay, the same thing goes with bearish engulfing. Yeah, okay, this is an example for bullish engulfing, but the same thing also applies to bearish engulfing. Okay, so this would be your entry point, this would be your stop loss. Okay, this is your engulfing, this is your confirmation. Okay, and this is your entry. Very simple, very easy. Okay, so I'll see you guys in the next video. Please do your back test, and then once you can understand this properly, then only you can start trading on your real account. Otherwise, please just test this thing on your demo account. Okay, it is best to actually give it a try in the real market instead of just back testing. But if you are more keen to learning, maybe you can just do your back test, screenshot as many times as possible, as much as you can, and then give it a try on the demo or on the real account if you are ready. So I'll see you guys in the next video. Thank you so much for your time. Thank you for your support. Thank you very much. Bye bye.